Alright, about to go long on NASDAQ here. Looking for high prices. This is during the 850, 910 macro. And above price, we have the new day opening gap high, new day opening gap low, as well as a 5-minute volume imbalance that you're going to see me annotate a little later in the trade. But for this specific trade, we're only looking for roughly, I believe it was 29.5 handles. Yep, 29.5 handles is all we're looking for. We're looking to pass another eval, so we don't want to overshoot our consistency target. And I'm entering off of a bullish fair value gap. Beautiful displacement here, that's what we want to see. I want to see large range green candles spooling higher. So prior to my entry, we had a bearish fair value gap be treated as a inversion fair value gap, but that was prior to macro. So price was trading above it, treating it as support. I look at that as a bullish signature, and we had dumped from, let me see here, price at, dumped at 6 p.m. and we had taken out a lot of sell side here. So I had no desire to go lower, to look for lower prices. I thought the damage was done to the downside, and price would want to start to reach up and attack some buy side. And we had a lot of inefficiencies above price. Some low resistance liquidity above new day opening gap high from today's afternoon session as well. I think price would want to attack that at some point. If not today, at least make its way towards it during Asia or London maybe. But yeah, you see me here annotate that 5-minute volume imbalance. When I was cycling through the charts on the 5-minute, it just kind of jumped at me, and I looked at whenever I see these large volume imbalances, price likes to gravitate to them multiple times. ICT has gone on multiple times saying that they are his weakest PD array, but they do like to get referenced to, and price likes to react and return to them sometimes multiple times. So I have 29.5 handle sits roughly a couple of handles below the bottom of that 5-minute volume imbalance. So that was a nice perfect target for me as terminus. I think the larger draw is the new day opening gap. So I think that's the longer term draw. I think we're going to reach to that as well. I believe we did actually. Yeah, price did reach that, but again, I'm not trying to overshoot my consistency target. I'm trading a 25k Lucid Flex account. They're the cheapest evals that I found that suit my personality and style. So I've been working with those. So right here, I'm going to annotate a bullish order block. Again, I like to see stacked PD arrays. Stacked PD arrays to me are either bullish or bearish signature in terms of my favor. Here I adjust my stop just below the consequent encroachment of the fair value gap that I used for entry. And now I want to see price not return to that order block. I want to see us completely continue moving towards our terminus. A couple of handles below that 5-minute volume imbalance. At this point in the trade, we have a small retracement on the sub 1 minute time frames, but everything on the higher time frame is still looking really nice. So I'm not worried at all. I'm sticking with the trade. And plus, I've reduced my risk. Yeah, at this point in the trade, I'm only risking roughly 9 handles. So that's $180. And price is looking really good here. I like that we have larger green candles and smaller black candles. Everything is looking really good in this trade. And at this point, I go break even. So, best part of the trade, we are risk-free, very close to our target. And we're looking to make around $5.95 on this trade. Originally risking roughly 20 handles. So a little over a 1 RR. But at this point we are break even, so risk has been removed. I haven't seen a larger volume imbalance in a while, so that was kind of nice. About a tick away, and there we go. That's all she wrote. See you guys next time.